right, what's going on, guys? It's Bert Ferguson, your Delaware Realtor, coming to you guys with another video. And I want to talk about something that's been in the news, a lot of people are asking me about, and that's interest rates. Everybody wants to know, what does it mean when the Federal Reserve cuts rates? What does that mean for someone who's looking to buy, sell, refinance? What does this all mean? I'm not a mortgage lender, but I'm a realtor, and I can give you a very good idea on what it means on a large scale context of these rate drops that are expected and what that means for you. So if you're watching on X or Facebook, YouTube, Instagram, LinkedIn, Snapchat, wherever you're watching this, make sure you guys go ahead and hit the like button, share this video, because you're gonna see a lot of stuff, a lot of news headlines about interest rate drops. And this video right here is gonna actually explain what that means for you if you're looking to buy, sell, or refinance. All right, guys, let's get into it. All right, guys, so let's talk about it. So the interest rates that we are seeing right now have actually already baked in the Federal Reserve's kind of interest rate drops that they're expected to do this year. So right now rates are like 6.3 to like 6.5. So generally 6.5%, a little lower, 6.3, 6.2, depending on where you look or what kind of loan product you're getting. And this is actually the lowest we've seen mortgage rates be in over a year. So we're in a really good position mortgage rate wise. But the thing is, when these rate drops happen, it won't be a drastic drop in those mortgage rates because the markets have already baked in that the rate cuts are going to happen. You see, investors, they look into the future. When these guys on Wall Street or people who are packaging up loans or who are looking at the markets, they look for forward projections. So it's already baked in that we're going to get rate drops this year and next year. So the bond market has already reacted to these rate drops, which is converting over to the mortgage market. And if you looked at my last video, I talked a little bit about how the 10-year Treasury yield bond actually tracks mortgage rates a lot better than the Fed funds rate. So it's already baked in what we're getting. It's already kind of there. We're already in a really great position. All right, so what that leads me to next is a lot of people don't understand that the Federal Reserves do not set mortgage rates. They set short-term bank rates for banks to lend money to each other, okay? A lot of people don't know that. So what they do is they set rates for other banks and what they're going to lend to each other. The bond market or the 10-year Treasury yield tracks mortgages a little bit closer. So when the Fed drops their rate, it could actually make mortgage rates go up. This depends on job data, the economy, CPI inflation numbers, and different factors on where mortgage rates are actually going to go, depending on these rate drops. So I think that's very, very important. A lot of people watch the news and they say, oh, the Fed's going to be dropping rates soon. And they automatically think that they should wait to buy their home or lock in their rate based on this information. And that's just not true. So what I want you to take from this video for sure is that the Federal Reserve does not set mortgage rates. They set short-term loan rates to other banks. They set those terms, okay? All right, so now that we've got that kind of background macroeconomic information, what does that mean for you if you're looking to buy a home? Well, it means that you should not wait for the rates, quote unquote, to drop before you make the decision on a home that's out there for you. For example, if you have a home that's $350,000, just a short increase in rates on a mortgage could mean hundreds of dollars per month. Versus if you lock in your rate right now, where we're seeing a 6.3 to a 6.5% versus a 6.7 or even a 6.8% rate with all of the news going on, it can mean hundreds of dollars for you. And right now, with our market being so tight right now in certain price points, you don't want to put yourself at any more of a disadvantage. Affordability, in my last video, I talked about this. Affordability is already very high. Inventory is also very short. So what that means is you need to put yourself in the best possible position to get the home that you want, and waiting on Fed funds rate, thinking that it's going to convert over to a mortgage rate, it's not smart thinking. So if you're looking to buy a home right now, let me know what you're going through. Leave a message down below or leave a comment down below and let me know what your thoughts are. And if I see you say that you're waiting for rates to drop, watch this video over. Rates are lower than they've already been for a year. And there could be potential for mortgage rates to go up based on the negative jobs data and negative economic data that we've gotten. Mortgage rates could end up going up when that rate drop does happen. And if you're watching this, by the end of this month, we should have at least one of those rate drops with another one happening before the end of 2025. So that's what that means for you. Home buyers, don't wait. Rates are great right now. So if you see that home that you love, make the decision and put an offer in. All right, now for my homeowners, you're thinking about refinancing and you're like, hey, I'm waiting for rates to drop. Well, that all depends on what you've locked your current rate in at. A lot of homeowners who bought during that pandemic time or even before that have those 2 and 3. I even know someone who's got a 1% rate because they got a local first-time homebuyers grant program that bought their rate down. So, I mean, if you've got these incredibly impossibly low rates, what that means for you is you might be sitting, unless you pay your home down or go out there, get a great deal on another home. Maybe a builder can give you a 2-1 buy down that closely matches what your current rate is, right? But refinancing right now, it just depends on what your current rate is. If you are already locked in at a great rate, it may not make sense to refinance into a 6% or 6.5% mortgage market, okay? So with those, I always tell people just to look at their rate, talk to their current mortgage lender and see what their options are, because there may be other options. Again, I'm not a mortgage loan officer, but I do know that if your rate is better right now than it is, for the open market, then you want to stay put and continue to watch and see what ends up happening. What this also is doing is for some of those sellers or homeowners who want to sell, this is why we've got tight inventory. This is why there's so much pent up demand and no homes for people to actually buy at a higher clip. There's so many great rates that people are locked into. They feel like, well, if I sell my home right now, I could potentially end up paying significantly more for not that much better of a home. I don't really want to leave where I'm at. So this mortgage market and rate market, it's really what's choking up the entire real estate cycle. So it's very interesting. Let me know what your rate is. What rate did you lock your home in at? If there's anyone who's got a really, really low rate or a really cool story about, how they ended up in that situation, go ahead and leave a comment below. These videos, I want to interact with each other so we can get a better understanding of the larger real estate picture. All right, guys. So that's what I want you to really take away from today. Buyers, right now, rates have actually not been better for a year. You're in a really great position. If you find a home and you like that price and you're approved for it, you should really consider not using the mortgage rate news as a part of your decision making. And if you're a homeowner or potential seller, talk to your current mortgage lender about what some of that stuff looks like if you to go into a refinance or into another home. And also, if you're watching this, pay attention to the news. Over the next couple of weeks, you will start to see news about the Federal Reserve dropping interest rates. But because you've watched this video, you now know that does not mean that mortgage rates necessarily drop, because the Federal Reserve doesn't set mortgage rates. They set short-term funding and interest rates to other banks. Okay? So guys, make sure you like, subscribe, share this video. This is really useful information in a short period of time that can really help someone who's very serious about making real estate moves this year. So again, my name is Bert Ferguson. I'm with the Rush Home team of Compass. We serve Maryland, Delaware, and Pennsylvania. And I'll see you guys in the next video. Have a great day. Bye.